So the whole banking sector is worried about a recession. We had a weak retail sales in the US declining 1.1%. We have everyone and their mother not being able to buy the same amount of products. Inflation is running high. Everyone's worried about a recession in 2023, but I already think it's here and it's gonna get worse. There's so much data to back that up. We even have to go back to what Michael Burry said about the recession, about what's happening with inflation. Plus, we have to look at the treasury yields and what's happening with that. It's going lower because everyone is piling into the treasury bonds because they want their yield. They are scared of what's happening in the market. Let's talk about it. But before we do, like this video, subscribe to my channel. I'm always providing you guys with so much new content. Click that like button, click that subscribe button. So everything is pretty much down today because of this whole week retail sales declining 1.1%. We have the S&P down, we have the futures down, we have the crypto down, we have the Dow down, all because of this new data that just came out. Weak US retail sales, factory data heightened recession concerns. They keep saying this, but we already know that the recession is here. There's so much data to back up the recession, and especially because the Fed is actually increasing rates, and they're still expected to increase rates with this going on. This just goes to show you that they keep changing the definition of a recession because it's supposed to be like 2 or 3 quarters back to back decline in the GDP, but you see the decline in GDP, but it doesn't matter because they just kind of look over that. US retail sales fell by the most in a year and the business equipment production slumped, raising concerns that the economy is losing momentum under the weight of tighter Federal Reserve policy. So this is what I keep saying, is that this policy is having huge effects on everyone. Auto lending is down, and that's not going to come back for a little bit. We see even Microsoft laying off a lot of employees. Man, that is a shock because we know how strong the Microsoft business is. We even have Google doing it, Meta doing it. Everyone is doing it, and they're following suit. So what do you think is going to happen with the economy going forward? But the crazy thing is people are just not spending as much money because of inflation, and that's what the whole Federal Reserve is doing. They're trying to cool that down. So if they don't cool that down in enough time, the sales are just going to keep going lower and lower and lower. With that being said, when you're raising interest rates, that's hurting the economy as well. But the thing about it too is that the job market is still pretty strong. According to a lot of data, the impact of a year of very aggressive central bank tightening and a quantitative tightening are starting to bite the economy, and they're biting hard. While a strong jobs market has supported shoppers, Americans are still feeling strained. The saving rate is near a record low and credit card balances have surged. So you see what's happening right now. People don't have a lot of savings. People are just using their credit card. You even see in the housing market right now, people are just not buying houses as much. You see the housing market going down in prices like crazy. So you're seeing a lot of stuff happen. So honestly, this year might be a negative year. Like, I can kind of see a negative 10-15% year for the S&P, or maybe even like just kind of consolidate for the whole year. Guys, what do you think? What are you predicting? Leave your comments down below if you're predicting a negative year, or maybe you see even a positive year. But the thing about this is that when people predict a negative year, like what I'm kind of predicting, usually the opposite happens. When people are like, oh my God, a huge recession's happening, or this is gonna happen, a lot of the times the opposite happens because when you're looking at the banks right now, bank earnings fail to impress investors as recession worries rise. So even the banks are worried about a recession. When you look at the main banks that actually deliver their earnings, like JP Morgan, like Bank of America, they had solid earnings. Even if it didn't meet the Wall Street estimates, they still presented a solid amount of earnings. But even with that, they're seeing consumers still kind of spending using their credit cards, and credit cards are at an all-time high. So people are still worried, and the banks are still worried because they're seeing auto lending go down. Companies are not buying long-term assets as they did before, so they're having like a downbeat kind of year. JP Morgan Chase, Jamie Dimon said the bank's earnings statement that although the economy is still strong and the consumers and businesses are spending healthy, we still don't know the ultimate effect of the headwinds coming from the geopolitical tensions, including war in Ukraine. That still hasn't kind of calmed over, so that's very vulnerable. The vulnerable state of the energy and food supplies, persistent inflation that is eroding purchasing power and has pushed interest rates higher. And the Fed is not backing down from these interest rate hikes until they really see inflation kind of cool off. Even though inflation was at like 6%, that's still not enough for the Federal Reserve. So we can kind of see that maybe increase not as much, but still increasing. The bank added in the earnings release that it now expects a mild recession as a base economic case. An increasingly slowing economic environment, we are carefully watching the impact of higher rates on our customers. Wells Fargo recently announced plans to pull back on its massive mortgage business. So, man, we're still seeing a slow kind of mortgage crash or housing market crash. It's not going to be the same like 2008, but still, people are just not buying because their interest rates are at these crazy prices. People just need more money for what they're getting now. Like, especially if you're buying a property and you actually want a cash flow on that, you need a high rate. And like the prices just don't make sense for a lot of people buying houses. If you're looking at it as an investment, and people that are living there too, they don't want to spend that high interest rates. That just kills all your paycheck. Moody's Investor Service analyst Peter noted in a report that credit provisions are rising. So people are defaulting on purchases that they use credit on. So with that rising, that's going to have a significant impact on the economy. Higher than expected interest rates pose a significant risk to the outlook of the credit quality, loan growth, and net interest margins. All that is going to stress the economy and just not provide any growth because people are not going to get loans anymore. The banks are kind of very hesitant to give out loans. So that's not going to provide any kind of fuel to the economy. People just want to save their money, protect what they have. Man, it's just not looking good for the economy. And then you look at the treasury yields. Treasury yields extend drop after US retail sales. People are running away, man, from the market because they're afraid of what's going to happen in the economy. They're looking at all these treasury notes to 10 years or 5 years. They're trying to put all their money into safe asset bets right now. That is making these yields go down for these treasury notes. People keep putting their money into these notes, which is causing a lot of these yields to drop rapidly. We can probably see these yields continue to drop this year as the data keeps coming out about inflation, about the economy. Inflation might be, hopefully inflation goes down, but it might stay the same. So people are still going to be afraid. The retail sales might not recover as fast, so people are just going to keep putting their money into treasuries because they think it's a safe bet at this time. We still have people like Michael Burry talking about inflation and how inflation has peaked. I pretty much talked about this in my last video, but he's saying that the recession is already here pretty much. The Federal Reserve is in a bad position because if you think about it, if inflation is going high, they need to raise interest rates, but that's going to cause a bigger recession. If the inflation goes down, government might cut rates again because they're seeing inflation go down, which causes another inflation spike. So it's kind of like, damn, where can I win in this? So we have bad scenarios on both sides. What do you think about all this going on in the market? Like this video, subscribe to my channel. Peace.